Let's talk to Robert Omotunde, who is an investment analyst with AfroInvest now, as we talk about the fixed income markets and, of course, some of the other we'll talk about the banks. So good morning to you, Robert. Thank you so much for joining me.
Morning, Harry.
So let's start with taking a look at the markets. Yesterday, we saw Treasury bills recording gains for a second consecutive session, with mostly the short and medium-term tenors being actively traded by investors. Is it because of the NTB auction that was held by the CBN yesterday?
Well, partly so. What we noticed about the fixed income market recently has been that a lot of investors for the short tenor instruments, and this is seen across both the treasury bills market and, of course, the shorter term to maturity of bond instruments. You recall that yesterday there was an auction of about 150.5 billion naira in three major instruments: the 91-day, 182, and the 364-day instruments. And we saw that a lot of investor sentiment was in favor of most treasury bills instruments. And the reason is because some investors, or most investors, find it more convenient to play within the shorter end of the investment curve. And the reason is because of so many other macroeconomic issues. Not so many investors are willing to lock in their fund for a longer term, given the different macroeconomic challenges that the economy is facing. So when you see that within the fixed income space, when the yield curve seems to favor most of the shorter tenor instruments, it means that the expectation for the future, as investors are pricing, is not so good, and that's why you will see investors pricing higher most instruments at the shorter end of the curve as against the longer end of the curve.
Yeah, because we saw an oversubscription of with a bid to cover ratio of 1.35, and investors demanded a total of 261.52 billion naira. But now, looking at the bonds market, what do you make of it? Our investors have been particularly cautious trading in bonds, even though we're expecting the Debt Management Office to hold a bond auction next week.
Yes, what we notice for the bond market is a different story. And for investors that are designed, this is an opportunity for them to take advantage of the market. We have noticed that there has been a form of convergence in the way yields are trading across the bond yield curve. If you analyze the yield curve week on week, it appears that there have been generally higher yields in terms of what the investors were pricing last week as against what they are doing this week. On the average, we see a yield of about 12.4%, but this is kind of polarized across the yield curve. So for a tenure of 7 years and above, we see investors pricing yield as high as 13.6%, whereas when you look at term to maturity of 2 to 6 years, investors are pricing at about an average of 12.4%. And then when you analyze from 1 to 2 years time to maturity, you see an average yield of about 11.6%. So it appears that investors are pitching their tent, along the yield curve, of course, with the exception of the August 2016 instrument, which is currently trading at a yield of 7.8%. And of course, the maturity is in August, so it's expected that it will take this part. So as we speak, most bonds, of the 17 instruments that are listed, FGM bonds, about 10 of them are trading at discounts, while only 7 of them are, slightly trading above par, with the exception of the 2022 instruments, which is still significantly, trading at premium at about 112 naira. So we believe that investors are kind of wary, cautious of locking in for a very longer term because of the various issues that the economy is facing. And from the monetary policy angle, if anything, if the core guidance of the CBN is anything to go by, at the current inflation rate, of 12.8%, it will appear that we may likely see an upward repricing of the benchmark rates. And if that happens, you have a direct impact on the yield environment. So investors might as well be, playing in anticipation of the likely move by the MPC.
Well, talking a little bit more about next week's bond auction by the Debt Management Office, do you think it will be oversubscribed, just like the first auction for the second quarter? We saw an oversubscription for the three bonds that were actually auctioned by the Debt Management Office.
Yeah, definitely so, because if you analyze as far back as over 2 years now, for every bond auction that has been conducted, we've always seen the rate of oversubscription, increasing by the day. Most times over 100% oversubscription, and this is featuring the level of funds within the system that are waiting to be deployed into relatively safer investable use. You will recall that in the equities market, that's not in too rosy. Volatility has been something to worry about. So most funds within the economy have been tracking fixed income instruments, and what we see play out in most auctions, is a lot of these funds trying to find a place in the limited supply, can put it that way, that we have in the market. So definitely the auction for this month, the month of May, will also be oversubscribed, judging by the history and the level of funds that are tracking FGN instruments.
Well, thank you so much, Robert, for joining me on the program and sharing your perspectives. We'll have a conversation on the state of the banks sometime very soon.
Thank you for having me.
And that's it on today's edition of the program. Many thanks for spending time with us. I'm Harriet Agbenyi. Have a profitable day.